Welcome to The Global Signal, a podcast exploring how emerging technologies, international policy, and financial markets are reshaping global power. I'm Joshua Charles.
And I'm Benjamin Fields. Each episode, we move beyond the headlines to examine the strategic dynamics that will matter not just this year, but decades from now.
How innovation drives competition, how capital flows influence geopolitics, and where cooperation remains possible in a rapidly changing world. Let's get started.
Rachel Ziemba is the founder of Ziemba Insights, an advisory firm specializing in macroeconomic and policy due diligence for alternative investors and public sector clients. Her work focuses on connecting local political and economic catalysts to global macro trends, with particular depth in energy markets, sanctions, and emerging economies. She's also a senior advisor at Horizon Engage, where she writes regularly on financial sanctions and coercive economic policy, with expertise spanning Iran, Russia, China, and broader sanction regimes. Rachel is also an adjunct senior fellow at the Center for New American Security, contributing to research on energy, economic security, and is also a member of their Future of Sanctions Task Force. Previously, she's held senior research positions at Rubini Global Economics, where she led global macro and emerging markets research, advising investors on commodities, sovereign risk, and geopolitical scenarios. She also has taught international political economy at NYU Center for Global Affairs. Rachel holds an MPhil in International Relations from the University of Oxford and an AB in History from the University of Chicago. Welcome to the podcast, and we're looking forward to all the things you're willing to share with us today.
Thanks for having me. Looking forward to the conversation.
Rachel, great to have you, and this is a timely discussion. As we all know, quite recently the United States military captured Venezuela's President Nicolas Maduro in the last few weeks. We'll start by contextualizing the discussion, and so we'd love to know historically how significant was Venezuela in the global oil market. At its peak, was it truly a price-setting producer or more of a politically influential one?
So back in the day, and we're talking many decades ago, Venezuela's oil production peaked out, or, if we go back into the 90s, we were talking about production of 3 million barrels a day, significant, but not a big swing producer, for example. If we think about power in the energy markets, it comes in part from holding spare capacity. That's where Saudi Arabia's influence, for example, comes from, that ability to ramp up and down. But Venezuela was a founding member of OPEC back many, many decades ago, and was as important in that context. But since that recent peak in the 1990s, early 2000s, Venezuelan oil production has been on the decline. And that came well before the U.S. imposed financial sanctions on Venezuela in the first Trump administration.
Definitely insightful. It's easy to overstate, or let me say oversimplify the historical contextualization right here, but that speaks to the potential magnitude of Venezuela's oil sector, particularly if it can address implications with respect to capital expenditure. There are many reports that, hey, this isn't something that can be done in a matter of, 24 months. This is a long-term process, and it's something that's going to take some time.
I think that's right. So I think there are some quick wins, right? Big increases are really a matter of several years and a lot of billions of dollars. Some estimates put it at, $100 billion, $150 billion. This is expensive stuff in that context. But before I get into that, maybe useful to talk really briefly about what quick wins could look like. The first one that the U.S. government is doing, in a sense, as we speak, is working with global market players trying to redirect oil that had been going to China through illicit shipping and financial networks, and to sort of sell that onto global markets, some of it going to the US, some of it maybe going to places like India, and just trying to choke off those illicit networks that supported, a range of illegal mining and illegal other aspects. There might be another phase. So we could look at, a couple 100,000 barrels a day coming online versus where we ended the year, which was a significant, yet another significant drop in Venezuela's oil output after the U.S. imposed effectively a naval blockade, seizing tankers, enforcing its sanctions through military means. This is all the tools in the toolkit coming together to put pressure. So first you have that phase, then you might get to a point where the players that are already in place, like the big U.S. oil company Chevron, that stayed in Venezuela through this whole saga. You could see them invest a little bit more. You could see some potential for some very risk tolerant small producers trying to go in and improve some of the oil company joint ventures. But anything longer term needs significant equipment, significant cash, and that means predictable operating environment, regulation, royalty structure, all of those things. And I think it's too early to say if that's we're going to see that. And so it's not enough for President Trump to say, "Oh, well, we'll give security guarantees." There needs to be some, a clear transition and clear signs from the Venezuelan government as well. And there needs to be a pathway for some of those oil revenues to go into Venezuela to support some of the non-oil sector, in my view.
Thank you. That gives us a really good intro into the conversation and really trying to understand like what things will look like a little bit from a short, medium, and long-term perspective. And so the next question will be likely what a lot of our viewers are hoping to see. And I'll give a little bit more nuance towards the end of the question, but from an energy and strategic standpoint, why do you think the U.S. chose to act now against Maduro, given Venezuela's limited current production? And what problem was Washington trying to solve? And then to add a little bit of nuance, for example, Trump has had some of this posturing towards Venezuela in his 2016 administration, but he never really acted. And so would the U.S. have intervened if it was a Biden administration or a Harris administration or a Clinton administration? And then what would that look like if you think they would intervene?
So, yeah, why now is an interesting question. I think, this is happening at a time where the global oil market is pretty well supplied. We've had OPEC Plus adding new supplies over the course of this year, maybe not as much as they pledged, in part because some countries like Nigeria, Angola, and others can't really. Oh, Angola is no longer in OPEC. But even Saudi Arabia maybe not fully fulfilling it. But we've had countries like Venezuela's neighbor Guyana adding supplies. This has been a real success story and will be over the medium term. Brazil is producing more. So this is an environment where there isn't a shortage of oil. And global growth is less oil linked, less oil dependent than it was in the past. Right, electricity, if anything, is more of a constraint on economic growth going forward. But I'll get off my soapbox on that. This could be a whole other episode. So I do think the fact that the oil prices were relatively low gave Trump a little more of a window to increase this pressure over Venezuela over the last 6 months, and to force, sort of to seize Maduro. Now, the thing that's interesting that we haven't really talked about is, so Maduro is gone, but the acting president of Venezuela is his vice president, or is a woman who was his vice president, a woman who was the energy minister before she was vice president under his regime. Her brother is the chair of the National Assembly, again, part of the regime. Most of the military and security apparatus, again, part of the regime. So this is really a change of the leadership at the top. We'll see if the policies change, but this isn't maybe a typical regime change of a government sort of imposed by the U.S. So I think in terms of what Trump was trying to achieve, now, he states a whole number of goals, including rooting out cartels and stopping drug trade. It's not evident to me that there was a lot of drugs coming from Venezuela. Neighbors like Colombia or Mexico as a pathway for Chinese fentanyl to get to the market, I think there was a stronger case. It's likely that there was a bunch of dodgy activity going on that tends to happen in highly sanctioned economies, right? If you can't access public markets in a clear way, there can be a lot of illicit activity that goes on. Um, so, but I think he wanted pliable leadership. He does want cheap oil. He cares more about cheap oil for U.S. consumers than he does whether U.S. oil companies are pumping a lot. There's a trade-off there. And I think he may also have wanted he may have wanted an easy target, right, to send a message to Venezuela in a way that might make some other actors maybe not fully fall in line, but respond to U.S. coercion. We'll see. Trump in term two has talked a lot about territorial expansion. We see his comments about Greenland. We've seen comments about a range of different countries. This does seem to be a more interventionist Trump administration than the first administration. Now, in his first term, there was meaningful economic pressure on Venezuela. And since that time, Venezuela has been one of the larger sources of undocumented immigrants into the United States. And so one of the things that Trump wants was to be able to send those individuals back to fulfill his immigration agenda locally. We'll see whether this new government, new old government, is a partner in that way. But I think that message globally is also an important one, and I think it's also tied in to some of the administration picks that he made. Marco Rubio, both Secretary of State and National Security Advisor, definitely came in wanting Maduro gone, wanting the Cuban regime under, under pressure in a different way. And so his focus on the hemisphere, on the US being much more active in the hemisphere, reducing China's role in the hemisphere, and making the Western Hemisphere safe for US business, I think is a key focus.
Thank you. Those were some really insightful answers. I think it gives us a pretty good understanding of where things are going and why we intervened. One real quick question I wanted to ask as a follow-up, because I'm sure a lot of viewers will like to know about it. There were a lot of claims that there were a lot of Chinese and Russian influence in Venezuela. And so I wanted to ask, to what extent do you think those are true? I've read some reports and heard from some of my contacts in the intelligence community that a lot of the cartel money laundering is actually happening through Chinese networks, through these. They have different names for them depending on the language and the community we're talking about. But, the double-ended system where, somebody's transferring money here and then local Chinese are giving cash and things like that. And so Venezuela does have a huge Chinese population compared to Colombia. And so is there any evidence that there actually is a lot of Chinese or Russian influence in Venezuela, that they're participating in drug networks or in military sharing? Or is that overblown, and is Colombia really a bigger problem?
Yeah, well, so I think how I think about, I mean, and some of it's this point of if the focus is illegal drug activity, how does one think about those risks? So if you think about the military and security apparatus, definitely involved a lot of Russian and Cuban influencers. The Russians reduced some of their role in recent years. The big Russian state oil company had been involved in a joint venture, but then as financial sanctions on Russia came into effect some years ago, they kind of shifted that stake, and so economically, the Russians are not that involved. But they did provide a bit of a lifeline. One of the dynamics at play I mean, both countries did, but one of the dynamics at play in Venezuela is they have a lot of very heavy crude that needs to be diluted with other lighter fluids in order to sort of flow through pipelines or be transported. So in the energy sector, we call that diluent. So you might bring in naphtha or other light fluids, and Russia actually was a major provider of that in the last, definitely over the last year and in recent periods of time. I would assume that Chinese actors were involved in some of this cartel activity. Um, they were definitely involved in some of the illicit gold mining that we know occurred sort of in the south near the borders with Colombia. China also has been the buyer and, and user of this whole illicit shipping network, and that might have led to some money laundering. I mean, one of the challenges is that, as I said, in an environment of financial sanctions and economic pressure that make it near impossible to use official channels, the coping mechanisms that countries adopt to shield themselves often starts with a wide range of illicit activity. Some of it may be close to legal, and some of it gets more and more murky. And so I'm not saying that sanctions are the only problem here, because Venezuela was effectively in default. They stopped investing in their energy sector even before the sanctions went into place. There was repressive elements and an election that Maduro did not, respect back before the first round of US sanctions. But it did make it difficult to deal with the humanitarian crisis. But there are a number of countries in the region, in Latin America, where there's significant Chinese investment, and I think that's less of a concern. I think here, what China is repeatedly doing is providing a lifeline for countries that are subject to U.S. sanctions, taking advantage and getting the best deal it can via discounts and other things like that. And so I think there are concerns here. The question mark, though, is whether the next phase of rooting out this activity and especially building up institutions, creating a more stable economic and political outlook, whether that can be achieved. And I think it's quite difficult to, the US doesn't have a great track record of, mandating political, sort of transitions. And then the other dynamic, I think we're operating at a time where the US domestic and global respect for rule of law is facing a bit of a battering. So I think there's some challenges ahead.
Absolutely, and these are serious considerations when it comes to understanding as well as even from portfolio allocation, strategy and just these different metrics or mechanisms that investors can allocate capital towards. These are real considerations that can have a material impact on potential price fluctuations of these different assets or the viability of getting things started in terms of hard assets. And this touches upon our next question. And Rachel, you've alluded to some of these dimensions already when it comes to bringing Venezuela's oil production back online, talking about some of the constraints with respect to capital requirements, governance, even geography and infrastructure decay. So from your vantage point, which of these most limit near-term foreign investments?
I know it's kind of a little bit of a cop out to say all of the above, but I do think it is the combination of that. I'm talking to you on the sidelines of a big mining conference, and one of the refrains I heard so many times today, and it's the same thing that I've heard many times that investors want. They want policy predictability. They want incentives that either aren't going to change or rules that aren't going to change. It's not always possible to get that. But that sort of a regulatory environment, royalty structure that isn't going to change or doesn't change a lot is really important for these long-term projects, at play. Um, the we're in a world where high cost oil assets are less attractive now. And and Venezuela's fuel, they have potentially a lot of reserves, right? Some estimates suggest the highest in the world, but there's a question mark of how much money has to be put in order to get out sizable volumes. And so I think that is a concern. And it just means that I think some of the risk reward calculations for some of the oil majors might be a little bit, a little different now. Now that being said, there's technological improvements, there's a variety of things going on. This sector is becoming more and more efficient. And so, we'll see what that predictability looks like. But this is definitely not one of the lowest cost sort of environments. And then the other thing that I think is hanging over on the medium term is this question of the debt and the arrears that Venezuela has. President Trump and team have made it very clear that they're not going to prioritize and have the bondholders be paid anytime soon. Because they know that a lot of money needs to go into new investments and needs to go into the economy. But that's also going to be one of the factors if investors are thinking about making a long-term play. They want to understand, is there going to be some call on their capital, some contingent liabilities down the line that might impact their rate of return? Or is there going to be some sort of political crisis because the country is not stable, that means that nationalization could be a risk again, because that's not something they would want.
I guess the next thing we want to know
Sure.
is in the short and medium term, where you're less likely to want to spend a lot of outsized money in order to get little return. How should markets actually price Venezuela in terms of crude prices or refining margins or energy equities? Should they actually price them at all? And where do you see real market sensitivity versus headline risk? And then if I were to add a little bit of nuance to this question, let's say that, for example, energy didn't work out. Venezuela has a unique position relative to the equator. They have a large population. Would people be able to invest in things like agriculture and agro industry or tourism, manufacturing, a service industry, logistics and transportation, etc.?
Very interesting question on where that sort of goes. How should this be priced in global markets? I think we're looking at modest additional supplies from Venezuela in the neighborhood of, as I said, 500,000 barrels a day, maybe even up to 1 million. That's not chump change, but this is sort of, modest additional supply at a time when demand is sluggish. And so I would say modest negative pressure on oil prices. And then how it gets priced, we also have to weigh that in with whether the decline in Russian supplies and Kazakh supplies that we've seen over the last several months relating to the conflict in Ukraine, does that persist? We're having this conversation when continued protests in Iran are going on. Oil production, oil exports have not been affected there. But there could be some wild cards there and policy changes there. Or there could just be an awful lot more repression, and the regime lives on for another many more days. So I guess what I'm saying is I think Venezuela alone is not a major game changer for the oil industry in the sort of coming months. It could be a significant factor in the medium term. Now, I think we had this big move in US listed energy equities on the news sort of in the last week. I think some of that might have been a little overdone. That was partly a story of it was America first and American oil companies as major drivers of this transition. Any additional benefits from reserves that could be allocated might be offset by greater capital needs. So I think maybe, cool your jets a little bit. And other global dynamics. I mean, I mentioned Guyana as a play that has sort of been quite attractive for some of the US oil majors. I think we need to look at the overall picture rather than Venezuela itself. Now, maybe that brings me to this interesting question of what else can drive the economy. So I think historically, oil has been a major driver of Venezuela's economy to the extent that it experienced Dutch disease and other sort of sectors not being priced out of the market, but there was a relatively higher cost of living and ability to support, in this way. Across Latin America, you have a number of countries that have deindustrialized. Mexico is maybe a notable exception because of its integration with the US market. But, it's been challenging for Brazil to maintain and grow its manufacturing sector, for example. I think that's where a couple of decades of underinvestment in human capital and other dynamics probably make manufacturing a challenge. Uh, Tourism, Venezuela did used to be a major, tourism destination, service sector, and the like. I would think there'd need to be some significant infrastructure. So things are definitely possible, but one of the ways you could get this started is with leveraging the energy revenues, sort of reinvesting them. Of course, that's a lot easier said than done. Other resources I mentioned earlier, the illicit gold trade. There might be some scope for some mining dynamics. A lot of countries are finding critical minerals these days. There's a lot of demand for that. Questions about what price things would sell for. It's sort of early days for geological surveys and things like that. But those would be the things I would watch for. But all of these sectors that we've mentioned still require an economic and political transition and some predictability. The issue is more that you might have more people able to share in the fruits of some of this development, whether it's on the private sector side. But that's also coming back to that where addressing the debt, addressing the financing issues, I think is really important because right now, Venezuela does not have market access. Venezuelan individuals, unless they're sort of earning money abroad, don't have market access. And so in order to foster and rebuild the financial sector, you might need that. Now, you could look at it another way and say, well, some of those Venezuelans that fled abroad have done well for themselves abroad. They went places legally. There could be scope for some diaspora financing and other things if the local conditions were right. And so if everything goes well, then I think that human capital abroad and some of that diaspora financing could be a positive upside.
The human capital component definitely has some potential. I also believe that when we're looking at even things such as repatriation policies or even just capital control mechanisms. There has to be some level of forward-thinking policies and initiatives in place to ensure that the Venezuelan capital markets remain or have some level of liquidity over time. And this leads into the next question to some extent, and it is in relation to the recent developments. Do you believe they meaningfully increase the probability of political transition? And if so, how would regime change alter Venezuela's oil outlook compared to the status quo? Presently, as you stated, the former VP has taken the reins, and so she does have experience in the energy sector quite substantially.
I mean, compared to where we were a couple of weeks ago, where it looked like there was no political transition coming anytime soon, there's a wider range of outcomes out there. Now, just about a year ago, actually just a little more than a year ago, Venezuela had an election with the opposition contested, and all evidence seems to suggest that the opposition would have won if all the votes were counted properly. Now, those members of the opposition are not part of this political structure at this point. We'll see how they, we'll see how it's finessed, and we'll see whether the acting president and those around her are interested in both developing this sector, but also developing some of the other sectors that would be necessary for economic and social transition. These are also the people who were involved in muddling through in this sort of time frame. So, maybe I'm too pessimistic. But those would be some concerns I'd have. The US government has thought about these different phases of stabilization and recovery and transition. They're not always so neat, they can sort of happen, they can collide into each other. But I do think that's, that would be something to watch. In terms of the energy sector, I think that it will develop if the terms are right. I think there's some over optimism, at least in the US government and other dynamics, about how extensive that's going to be. And that's where, regardless of even if some of this investment happens, trying to develop these other parts of the economy will be an important part of the story. And a success would really be one in which there were enough jobs, or there was enough of a positive feedback loop, that some of the many Venezuelans abroad could go back home, which in turn would relieve some pressure on some of the neighbors and those in the hemisphere where Venezuelans have been living. And there I'm thinking about Colombia among others.
Fantastic insight, Rachel. As we close out this episode, do you have any lingering thoughts that you would like to share with our guests, either listening in or watching this episode?
No, I think we've covered a lot of ground, and insightful questions, and happy to, if people have follow-up questions, happy to be in touch and continue the conversation.
Okay, fantastic. Rachel Ziemba, founder of Ziemba Insights. Thank you very much for your time. We look forward to continuing this conversation. And again, thank you.
Thank you.
My pleasure.